Our market monitor tonight is David Samra, Morningstar's 2013 International Mutual Fund Manager of the Year, an honor he shares with his co-manager, Dan O'Keefe. David runs Artisan International Value Fund and Artisan's Global Value Funds. Both are 5-star rated, and his international entry is in the top, get this, 1% of its category over the past 1, 3, 5, and 10 years. David, welcome. Good to see you again. Let's talk first about the emerging markets. And often when there are sharp sell-offs, as there have been this week, it points to opportunities to buy. Do you see that in emerging markets today, or do you think it's kind of game, set, and match there?
Well, interestingly, Tyler, what we do see is our aggregate multiples that make those markets look very cheap. But we very much believe that that is a reflection of two different parts of the market. On the one hand, there are a lot of large cap, government-controlled, commodity-oriented businesses that look relatively cheap. But we think that the earnings power coming out of those companies, as you're starting to see China slow down and commodity prices coming off, are not reflective of what the normalized earnings power is. So we don't believe on a long term they're very cheap. Now below that, you find higher quality businesses, and there the valuations are still relatively high. Now those are starting to come down now, and we are very selectively finding some opportunities. But on a broad-based basis, we still think that these markets have a long way to go before we'll find a broad swath of attractive investments.
You know, David, you talk about opportunities. A lot of times when you see these big international sell-offs, the knee-jerk reaction of American investors is, I'm going to stay away from these non-U.S. stocks. And yet you have a couple that you say selectively will be good. Let's go down your list. You start off with Royal Bank of Scotland. It's trading now at about $11.14. Tell us why you like this.
Well, I think that the backdrop here is the UK economy, where under Prime Minister David Cameron, the economy has really turned around and is starting to grow now. Royal Bank of Scotland is one of the UK's largest banks. It has a terrific franchise, but has been beaten down as a result of the financial crisis. And the company is still working through some of its losses. And as the economy starts to improve, as the company works through its losses, we see that the earnings should start to grow. The valuation here is what really pulls us in at 80% of tangible book. And it looks like to us it's trading on about 5.5 times normalized earnings. So from a target price perspective, we think it should trade at about 10 times, and that will take a few years to come in. But from 5.5 times earnings to 10 times earnings, you just about double your money on that stock over the next few years.
The second holding of yours that you like very much is Tesco, the UK retailer. There's a British theme here, David.
There is a British theme, and I thought it was appropriate in an environment like this to highlight that there are parts of the developed markets that are improving today. And you know, within the European context, the UK economy is out in front of that improvement. Tesco fits right into the wheelhouse. It is the largest food retailer. You can think of it as sort of a Walmart of the UK. It has very strong market position, about a third of the market. Its valuation is very cheap at about 10 times earnings. And the valuation is underpinned by the fact that the company owns real estate that approximates the market cap.
Okay.
And as the economy improves, the multiple should go up and you should generate a very good return.
Let's see if we can squeeze in one more, David. You have Samsung, and it's not cheap. It's over $1,000 a share. Tell us about this.
Well, cheap to us is relative to its earnings. Samsung is a global powerhouse in handsets, semiconductors, and displays, and the stock trades at about 6.5 times earnings. If we can just get it up to a modest discount to where Apple trades, who's their major competitor, it should trade on 9 or 10 times earnings, and you should earn a very good return on that investment.
All right, David, thank you very much. I assume that all of these stocks that you've mentioned are in your portfolio in one way or another.
They are, very much so.
David Samra, thank you very much. Manager of the Year in the international category, Artisan International Value and Global Funds.